Welcome to thestockminute.com. I'm Brian Johnson. And a decent day in the markets today. Dow up about 0.5%, while the S&P and Nasdaq were much stronger at 0.75%, and not a decent day for trading, especially if you're a day trader. If you've been holding through all of this to the long side, you're still doing well, but you can see the labored moves to the upside continue within the markets themselves. We saw this beautiful pullback right into a lower support line, reiterating once again how important it is to know where to draw your lines. This is just textbook right here, falling right into this lower area of support and then bouncing very hard from there. Fridays have been very good to the markets. It continues to be very good for the markets. We are coming into a 3-day weekend. No trading on Monday, so keep that in mind over the weekend. Things won't start up again until Tuesday, and we're coming back to an options expiration week. So add a short week onto volatility should make for a wild ride. All right, so here we go. Running our way up above the 20-period moving average and continuing its way up all day long. Bulls doing nothing but buying the dips. A little bit of a gap down this morning, just bought it right up. Even before the markets were open, you could see the acceleration coming into the buying side. Dow then for the day, ending up a little bit. This is just, look at this, how labored it was back here. Same story here. Do we get some sort of a big kind of a pop before it all ends? Anybody's guess. Point being, still nothing to get really, really bearish about. I'm still extremely cautious to the upside, but nothing that's making me necessarily dive in huge to the downside quite yet, till we see the markets move. I won't be suggesting anybody within the daily videos, if you watch my daily videos, I won't be suggesting you guys do anything to the short side quite yet. You're going to want to wait a little bit. I'm being a little bit more aggressive with my subscribers. That's why I needed to say that. All right, NDX on the 60-minute. You can see just a straight run up again right here. The NDX 100 looking very, very strong. I think they're all waiting Apple earnings. They always do. And that'll be Tuesday after the close. So I'm not sure that this move to the upside isn't quite over with yet. We don't have to wait a couple more days next week to get this thing to start giving us some sort of weakness or pullback within the market itself. Because Apple has not reported, and so there's still a little bit of work to do on this earnings season before things, I think, start to turn around for everyone. So NDX looking very, very strong, continuing its climb to the upside. Daily looking very, very strong. Just hardly anything to talk about from a bear side at all. One day of this little bit of a dip, but once again, all dips are being purchased right now hard by the bulls. Bounce off the 20, and it's rallied ever since. NDX weekly, same thing. Very, very, very strong from a weekly chart. Very, very extended, yet still very, very strong. Trend still looks good. Looks like everything is still on its way for the weekly charts. But we'll see if this doesn't change next week. I'm looking for maybe a smaller doji type candle next week. A little bit early to tell since it's such a volatile week with options expiration. But still looking very, very good here. Let's get through the first couple days and then start looking at these weeklies again. But as you can see right now, still everything very strong right now in the markets. Got to be a lot of bulls for good reason right now sitting around in the markets. SPX 60-minute bouncing nicely off the 20-period moving average, straight up, gapped a little bit down to start the day. Did not last long. That thing ran hard very nicely all day and then just hovered up here for the longest time before one final end of day pop to kind of complete things here for the week. See where we open again on Tuesday with the rest of the markets. But overall, still very, very strong through here. Look at this. Much like we saw back here. Very same thing happening here. Anybody's guess where this is all going to end. But we did get a little bit of movement to at least trade today. Now we've had, a little bit of a pop, but most of it comes on a gap up. This time it was a gap down to start the day. That's nice. That gives us opportunities to really trade something. For you intraday traders, it was a beautiful opportunity to get in right at the open and ride this thing up for most, if not all, of the day. I got in just before the market opened on the futures contracts on an entry I saw, and it was just pretty much let it run all day long. I didn't really see anything that spooked me at all during the course of a day. Those are the type of moves you want to see. When we get these gap ups, though, you can see there's not a lot of movement to be played with. We went to 1293 today, but had we gapped up from yesterday, we would have only had maybe 5 points to play with. So bigger picture, these candles look great. And this one was good because it was started with a gap down. But you get these gap ups, which we've been seeing on some of these larger candles, and it's just really, really, really difficult to trade those type of days. Weekly, same thing here, looking extremely strong again for all of the markets. Bulls are firmly in control up here. VIX daily, guess what? Complete tumble, down 6% today. Totally in line with what we saw with the markets, and completely sticking with what we've seen in the past. VIX goes up, market goes sideways. VIX goes up, market goes maybe a little down and then sideways. And then within those 2 days, and then plop, the VIX completely falls apart while the markets scream to the upside. We've seen it over and over and over again, and we saw it once again this week, getting us back into this particular pattern. Told you I wanted to see it hold. No such luck. Nobody is panicking at all in the markets whatsoever. They're very content with where things are at and how things are going. So, once again, VIX plopping, coming way down here almost to brand new lows. That's why we wait for the weeklies to close, guys. Apple 60-minute, of course, very strong, pushing upwards towards that 350 area. Looks very likely that it'll hit that area as well. Here's the daily looking very strong as well. And the weekly popping up and now out and closing above this blue line. So this little blue line I had in here, which was a guesstimate on my part as to where the Apple would maybe find some sort of overhead resistance, not holding overall for the week, giving us opportunities during the week to play a little bit to the short side. But boy, one opportunity, I got one chance to play Apple short, and that was it. Otherwise, I'm not standing in front of this monster. We'll wait for earnings to be reported, and then we'll make a move from there. FAS 60-minute also reaching these overhead levels and stopping right here for the day. Same type of movement, though, straight up for the FAS. The banks are very strong in through here. A lot of work being done on the backside to keep these banks strong and everything healthy within the markets from that standpoint. That means, guess what? We hit the lower blue line. I know a lot of you were like, what? You really think we'll get there? Yeah, I really do. Lo and behold, we finally did. Took a hard push, but as the banks became strong, we saw the big push up in the FAS, which took us to the upper blue line, and this one drug us right back down to the lower blue line. Now, I'll be talking a little bit more come next week about a strategy within FAS and FAZ, so come on back, make sure you pay attention, and maybe you can pull a little bit of money now out of FAZ on some very speculative trades, but we're going to play a little bit with the markets here and see what happens. Daily as well, getting right down and close to this lower blue line, and this is still my overall target. Yes, I know, believe it or not, on FAZ. Still looking for it to maybe reach this blue line down here. We'll talk more about that this weekend as well. Okay, now some of you have been wondering, what do we get with the newsletter? Well, this is what you get. These were my picks from last week. Here's what I had on the chart. CF, we've played this a couple of different ways. I got out of this at the end of the day, was not interested in holding over 3-day weekends. I don't like to hold over 3-day weekends. Our first entry was back here on CF. Mine was about 128 for the more aggressive, but above 130 for the more conservative, so we'll go with that. We got in above 130, we took profits at 135. We then sat around and waited for what kind of news may or may not come out, and then we re-entered at 140 this week and got out at the end of this week. So huge moves. We've made basically $11 in CF over the last few weeks. So this is the type of thing that is done in my newsletter. CF Weekly, and this was another reason we took profits today. Hit my overhead target. Now I'm out of it. We're just going to sit around, maybe wait for something else to set up, and I don't know. This is not something I'm going to be following necessarily going forward because it's hit my overhead price target. Once again, reiterating, when you have your lines in place, it makes trading infinitely easier when you know what you're doing. So sign up for the newsletter, give it a shot, see if this type of stuff will help you. The mentoring is by far your best option. I know not everybody can afford it, but Hard to put a price on education, but if you can't afford it, a good place to start is the newsletter. See if you can pull some money out of it. CMI was another one I did. We made some money on this because it was up and over this green line here, but not a lot. I'm showing you that not everything I pick runs $1 billion. I want you guys to know that I'm not perfect, but we still made money on this trade. It was up and over this line by the end of the week. We had made a little bit of money on it. Dig was another one I had on this, and we took it on the breakout of this. I've been holding this for a couple weeks now, but we took this one and it consolidated beautiful. This is textbook right here. If you've been through my course, you would have caught every penny of this move. Right through the triangle here, got the break, and this thing just ran and ran and ran and ran. So a beautiful, beautiful move in DIG, one that I had been had my all of my subscribers in, right in above this area here, 46.50. The more conservative entry was above 47. So even if you waited for the 47 entry, you still made over $2 in this thing, and could still be in it potentially. Hard run in DIG. This was a really, really nice, effective call. INT was another one. We got in above this line here. Had to play around with it a little bit, but above 37.25 was my entry. It made it to 37.55 by the end of the week, so a whopping 30 cents, which is like the max. You probably would have made maybe 20, 25 cents on it. So once again, not everything I call brings in billions of dollars. I'm not pretending to be the guru of the markets, but I will show you that once again, this was another trade that turned out very successful for us. These are the individual stocks that I give my subscribers over the course of a week. So if the markets are moving sideways or there's not much going on there, you still have something to play. Now, would you rather have played the SPX this week, or would you rather have played DIG this week? Or would you rather have played CF this week? This is what I do for the subscribers. They get a few extra things to watch, because I would much rather make for the week 6.5% than I would. What did they make on the SPX for the week? We had 6.5. And let's see, what did we do for the week? Would have been too bad. Yeah, 1.7%. So do you want to make 6.5%, or do you want to make 1.5% on your money? Those type of stocks are what I teach you to find in the mentoring course. This is why it's so important that you look into it. Would you rather make 6% over the course of a week, or 1% over the course of a week? You can change all that. And when you're making more money on your trades, then of course it pays for the education in no time, rather than making maybe 1%, or maybe not making anything at all. If you didn't make anything at all this week, well, then the newsletter has paid for itself for the next 5 years if you took any one of those trades. By the way, these were all the trades minus one that I had on my chart this week. I didn't try to say, okay, these are the best trades, and I'm only going to show them that. I don't try to do any of that. I'm not out to steal your money or pretend I'm somebody I'm not. That's not my desire, and that's not my angle. That's not how I work. There's a thing called karma in this world, and I'm not about to tempt it. So I give you the truth, and I give you what it just is what it is. These are all the stocks that I did this week. CF, CMI, DIG, and INT, along with one other one that I'm not going to tell you about because I'm still playing it. And we're waiting for the break. We haven't got the break yet on it. So I won't give that one to you until maybe we're done with the trade. Then I'll start putting them on these charts. Anyway, if this is stuff that can help you within your trading, think seriously about it. Don't commit you to 6 months or a year or anything like that. You can try the newsletter for a month, and if you don't like it, quit. Whatever, big deal. Not out that much. But it is worth your time and effort if this is stuff you're struggling with. Or if you just don't know how to pick really good stocks or find really good setups. If you're interested in doing that, if you're interested in just being given a fish, the newsletter is the way to go. If you're interested in learning how to fish, the mentoring is the best option for you. Period. It really is worth it. It's worth your time. It's worth your money. I can't tell you how many different ways there is to make the money back. If the mentoring teaches you not to take a trade, then guess what? You've made money because you didn't take a trade. Instead of getting into a trade and losing $500, now you knew not to take that trade, and you basically save $500, which makes you $500. So you have to look at it in all different aspects. But I hope it's something you guys will consider, because it is well worth your time. Especially now, if you do not know how to short, you are really going to be crying in your beer if you don't know how to effectively short the market. And that is something that mentoring really, really works on hard, because in order to really make money in this market, you've got to play both offense and defense. You've got to know how to go long, and you've got to know how to go short. If you really want to make good, decent, strong, consistent money in the markets, both are a necessity. Think about it, and we'll talk to you again this weekend. Bye.